Yeah. Okay. Thank you. Let me just set that. Hi. Good morning, afternoon, everybody. And I have quite a few emails from folks, and I had a message yesterday from one of my private clients, basically saying, "I'm not really sure what to do. I've got 35% cash, and should I buy the dips or not, or really not sure?" And I said to him, "Well, if anybody tells you that they are sure at the moment, they're either a fool or a liar. Nobody knows what is going to go on next, and we're all trying to knit fog, as my granny would say. This is the S&P 500 from 2007 to the drop 2009. The last 7, 8, 10 years have been really good for those of us buying the dips, and it's been very profitable. And as a result of which, it can make people very lazy or lull you into a false sense of security, should we say. So you think, oh well, I just every time I do this, I just buy the dips. And so this was the start of the rot from the peak in 2007, 2008. And clearly we had a move. And once again, this is what always amuses me when folks look at a chart like this after the event and you said, oh, well, it did that and it did that and it did that. You don't realize that at the time when you were in it and it was going down like this, you go, oh, crap, oh, no, oh, it's going up, I'm going to buy again. So, these things are in the cold light of day. It's just a chart, it's just some lines. And yeah, that made sense. I waited and I bought here and I'm a multi-squillionaire. It's not true. This is what happened. So what the initial drop that we had, and I think the initial drop was only about 10%. Yep, 10% on that one. It's right. Okay, there's a rally. We're in. Oh, we're off, and especially when we've broken the EMAs. Here we go. Woohoo! Off to all-time highs again. And then suddenly, then the next drop is 15%. And then we have 5, 6 months where it goes nowhere. And then the next drop is 16. And then hold on to your seats because the next drop is 36. And people who were then thinking about buying the dip, having just dropped 50%, believe me, we're not in a rush to buy the dip. But the brave ones who did, it came back up. And this, I think, must be the monthly 200 EMA, almost touched that and dropped away again. And by the point of getting down here, anybody that was in it up here and has nibbled at the dips on the way down is exhausted and is never going to buy a stock ever again. And then I showed you a while ago, I couldn't find it this morning. JP Morgan had a chart showing you that if you just buy and hold long term and don't try buy the dips, anything else, you just buy and hold, you keep putting money in every month and you'll always make lots of money. But they started the chart from 2010. So as ever, when anybody's doing it, and it probably was late 2010, I'm guessing it was from here, or certainly down here. When you look at statistics, when you look at anything, double check, question it, look it further into why have they picked the date they did? Because they certainly didn't pick that date as an example. Okay, so as to what's going on at the minute, yeah, we've just had a dip. Great, let's pile in. Ugh, no, 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 no. I am still 25% in cash. The gentleman talking to yesterday had 35% in cash, has nibbled his way into a few things. But at the moment, I said at the start of the Trump presidency, look, we're in for 4 years of fun and games. And even I didn't believe it was going to be as nuts as it is. I spoke the other week, and you should go back and have a look at this. If you go into the Mentor blogs and go to my investing analysis one and go here and scroll to the right, you'll see what I was talking about, stagflation. And this was a couple of weeks into this current war. And obviously, there's the other war that is still going on, Ukraine, Russia. And that has a massive impact on what's going on as well, because Ukraine, I think I'm right in saying, produces something like 40% of the world's fertilizer. And so a lot of that has now gone because obviously it's been bombed and they can't move it, etc., etc. And there is a lot of fertilizer apparently stuck now waiting to go through the Straits of Hormuz. And it is the time of year in Europe to be planting. And that could have a knock-on effect for countries like the UK, where they're reliant on imported foodstuffs because they don't produce enough of their own, and the lunatics in charge of the government are currently placing solar panels on prime farmland. So the knock-on effect of this is more and more likely, to me, is beginning to look as though we're going to be in a stagflation. Now, ironically, the Americans may avoid it to a large degree because they've got their own oil, but the three criteria for it: the economy slows down, and there's a report out today saying GDP will be down. Inflation stays high, and inflation is going to go up if this situation carries on much longer, and unemployment starts rising. And already in the UK, unemployment has been rising. And so I was talking specifically about there, but also in the Eurozone. So why it matters, the reason I raised the ingredients are in play. We've got all the ingredients now. You've got the geopolitical issue, you've got pressure on oil, gas, fertilizer I spoke about, and food, I just mentioned again. Supply chain fragility. 20% of the world's oil goes through the Straits of Hormuz. And then I think it's 30% of goods for Europe go through the Straits of Hormuz. So I explained that before as well. So go back and have a look at that, and particularly then start thinking about where should you be thinking about putting your money. I am not a financial advisor under any circumstances, and now more than ever, I must stress this point. I did, however, buy some gold the other day, but I am buying gold as more of a long-term plan, because in the short term, it could well be that gold drops further. But as I explained to you before, since the year 2000, gold is up around 1,400%. On the other hand, the dollar is down 50%. But there are periods of time when gold does not do well, but I have doubled and tripled my gold already. I am still, for safety first, buying gold. So have a look back at that. And then I spoke last week. I said that watch the treasury bills, because if for Trump will blink if this starts to shoot up. And I'm not saying it was directly related, but a couple of days later, spookily, Trump blinked. And I also spoke about the fact, I think he's got dragged into this war with the Israelis, and probably under the misapprehension that this will just be another one of those like Venezuela. We go in, we bomb a bit, and that's it, and it's sorted. You're dealing with an extremely large country. You're dealing with an extremist religious group in charge who do not want to lose their power base, and they're not going to give in quickly. And that was the issue and the point I was making last week. So this was the 10-year note. It's gone up to 4.33. And I explained the implications of this. If this had got up to 5%, then Trump would definitely have blinked, because last time we got up here, it dropped all the way back down again. And the significance is that when this goes up, they have to pay out more money in interest to pay their current debt. And I think at the moment, America, 20% of this year's tax intake will go to pay the debt. And if this goes even higher, then that will be more. Now, in the short term, this could be having the effect of partly why the dollar is doing well, because the big funds will be parking their money in the dollar to get not the 30-year notes, I wouldn't have thought, but they'll be in short-term notes, maybe even only 3 months and 6 months, because at least they're getting some interest out of it and there's some kind of stability with it. Whereas gold costs you money to store and it doesn't pay a dividend. So that's partly, I believe, why the dollar is going up. And then if ever you needed to think about being careful about joining in the stock market, Larry Fink from BlackRock has come out yesterday saying you really, really need to be investing in the stock market if you don't want to get left behind. Now, remember, earlier in the year, or back end of last year, Jamie Dimon from JP Morgan, for the first time I can remember, and I've been trading gold for 25 years on and off, came out and said that gold was beginning to look like a really good investment. The very next day, gold dropped about 8%. Do not believe a word of companies who are selling you stuff. Now, this is going back to what I've just shown you. This is an article from 2014 revisiting the 2007 reversal, and he was looking at all the different breakdowns and things in here. So this, again, we are looking at historical patterns. Now, this didn't age well. On February 27th, JP Morgan came out and said, in light of soft supply demand fundamentals, research sees Brent crude averaging $60 a barrel. And then 2 days later, or was it the day later? I mean, I'm laughing, it's not funny, but a day later, the US and Israel attacked Iran. And now we've seen what's gone on. So since then, the attorney in Al Jazeera the other day, could oil hit $100 a barrel? Well, I've just said, I think 20% of the world's oil is going through the Straits of Hormuz. Supply and demand issues, panic buying. Yes, there is always the possibility. Goldman Sachs now have stuck their head above the parapet, and they're saying that they think for the rest of this year, what were they saying now? I think it said about $80. So they're now expecting Brent crude to average $85 a barrel in 2026, up from their prior forecast of 77. So it's an ever-moving feast. Everybody's trying to work out what's going to happen next. And in truth, nobody knows. And I don't even think Trump knows, to be honest. And there's a good headline here. Where do the reported negotiations leave Israel? Because Trump claimed the other day that he good talks with the Iranians. The Iranians turned back and said, we haven't spoken with them at all. I have read a report that apparently Pakistan, Turkey, and one or two of the other Arab countries did have a meeting the other day to try to think of a way to come up with a solution. The UN in this has been a waste of time. And the UN really I think, is a waste of time at the best of times, because Russia and China will obviously oppose anything the Americans are doing. So there's nobody as a mediator. And because the Americans and the Israelis have killed a lot of the leadership, who are they going to negotiate with? Seems to be part of the issue. So he blinked. He paused it, saying that, good talks, productive talks. And I say, the Iranians said, no, we haven't spoken to anybody. But he had to back off. And I was saying the other day, how is he going to extricate himself from this and try to save face when clearly this could be a war of attrition? You think about Afghanistan, you think about Vietnam. This is not going to end quickly and quietly. And so he's blinked, he's backed off for whatever reason. And then another interesting point, I was thinking the other day, the press, when Russia invaded Ukraine, there were lots of headlines in the press about, the Russians, these are war crimes. They're attacking power infrastructure, attacking things that affect civilians. Well, the Americans 4 days ago were talking about taking out the power stations in Iran. So if it's not okay for the Russians, is it okay for the Americans to take out power stations? And if they had done, then the danger is the Iranians would have attacked the power stations, and it's still a possibility of all the other neighboring countries. And that really would cause to meltdown. Whether that war would end or not, the amount of damage that would be inflicted would have a long-term impact on energy. And it's not just oil, because Qatar is the biggest exporter, I believe, of LPG gas, liquid gas, which is bought by Europe. Now, as it is, the weather has improved in Europe in the last few days, so perhaps we've avoided the crisis that I was talking about last week. Now, on top of which, some of the Gulf states, Saudi Arabia, etc., have said, we're not going to put up with this much longer of Iran attacking us. So if they don't back off, we will pile in. But if that happens, we're talking about the Third World War here. You've got Russia and China on one side at the moment, keeping their heads down. You've got all of this could kick off in the Middle East, which is where all the oil is. And Israel still overnight apparently have been bombing the hell out of Lebanon. And there's talk that them and the Americans have still attacked parts of Iran. And then I shared this with you the other day. Ray Dalio says that for Trump to walk away from this and the Americans to be able to say, we won, they need to be in control of the Straits of Hormuz. And he was talking about the effect of how the Suez Canal crisis after the Second World War was a large part of the British Empire collapsing. So he has a recurring theme that at some point he believes that the American empire will collapse. So what do you do with your money? Well, the central bank organization says you should put it into bonds. And of course, I've talked about this before. The Americans are now paying 4% at the moment on a bond. But if you lend the money for 30 years at 4%, the inflation, remember, inflation over the last 20 years has halved the value. So the bond interest that you're paying is not enough to cover the inflation of the day. And in 30 years' time, when you get your money back, it will be worth bugger all. And then they also talk about gold. So their first tip is bonds and then gold. Now, another one, these are some of the things I spoke about earlier about what should you be thinking about investing in. Do some research, have a look. This is an article from Investopedia, and again, talking about gold as a hedge against inflation. And I've just explained it's up 1,400% since 2000, as opposed to the dollar, which is down 50. Commodities. So my current portfolios are heavily commodity related in terms of metals. Now, one thing to think about here is if we go into stagflation and we're going for a worldwide recession, which is a possibility, then the demand for silver may drop because it is largely used in manufacturing. So I have stopped buying silver at the moment and I am buying gold. Commodities, 60-40 stock bond portfolio. I think that's a terrible idea at the moment, personally. But you do your own research. It all depends on your risk tolerance, your age, and what you want to do. Having some cash is a very useful thing to have. And if this does kick off and get worse, having physical cash is not a bad idea, in my opinion. Investing in REITs, so it's real estate. Again, you've got to be careful with real estate trusts because, a bit like the private credit bubble at the moment, I remember in, I think, 2008, 2009, there was one of the big property companies in the UK had to stop people withdrawing their money because it would have exacerbated the collapse in house prices and commercial property. So they stopped people withdrawing. So you want things that are highly liquid, and gold is highly liquid. S&P's role in inflation defense, so they're coming up with some ideas in here. So do some research, think about it. This is a Swiss bank. They still think that by the end of the year, gold will be at 6,200. And they explain in this note, and I will post a link to this in the article. And then again, this was different. Oh, Ashley will like this one. I never spot head and shoulders patterns, and I've had a look at the S&P today, and I can't see it. But this is 2007, 2008, and this guy said this was the head, this was the left shoulder, this was the right shoulder, this was a support resistance, and this would have been, for Ashley, this would be the sell point here, and that would be a mega trade. So head, shoulder, shoulder, neckline, break, crash, and it was a bigger crash than it suggested. So something potentially to look at. I say I'm hopeless at head and shoulders patterns, and I don't think there's one there at the moment. That probably was one there, actually, thinking about it. I'm good after the event on head and shoulders. Head, shoulder, shoulder, neck. Oh, yeah, that was probably one there, but I don't see it at the moment. But I did talk about at the weekend on Sunday when I did my analysis, notice spookily how this 255 EMA combination works so spookily accurate. Price came down the week before on lots of things and bounced off the 200. The Nasdaq is still holding at the 200. If it drops from there, I would expect it to struggle at the very least at the weekly 55. Bitcoin rebounded again overnight. It surprisingly held up surprisingly well. Actually, that could be head and shoulders. Is it, Ash? Head, shoulder, comes up here, left shoulder. Could be on for another drop. Could be on the way up. Could be. Flip a coin. No idea. Ethereum in the up channel as well. Lots of the crypto stocks are looking as though they're in an up channel, but we're below all the EMAs. US 30 came down, bounced off the 200, currently bouncing off the 55 EMA. You get the picture. And then for gold, I said the other week, if it came down to 4.3, I would be buying, and I did buy some yesterday for clients and a family member. Could drop further. This is a long-term hold. And then silver, where are we going with silver? Bounced yesterday off the 200 EMA. And copper, I have bought a bit of copper of late because remember, commodities do well. I bought some platinum, bounced to the pip off the 200 EMA. Palladium, I think, has broken through. Where are we going next on palladium? Well, we've got this next bunch, and if it really goes on a drop, I would be looking to buy anywhere around 1200. So actually left me a lot of time. I think I did remarkably well there. So go back and have a look at this stagflation article and plan, because most people get caught out around trying to think. I think having some cash at the moment is a useful idea, but I'm not in a rush to pile in for buying the dips too much at the moment. This is my current portfolio. I don't have all of these, but I do have some of these for different clients. And we bought yesterday, bought some AG and also bought some core mining. What you have to think with things like this is core mining 3 weeks ago was 58% higher, and they've just reported mine life extension and resource increases. What that means is they thought that this mine was going to run out, and suddenly now they've discovered that they can get more out of this mine. That's positive. And then there's other positive news that's been coming out of late. It's gone now. But the point is, for me, the sales are on. I do like First Majestic Silver, so we bought some more of that for clients. I did really well. I actually sold a chunk at the top up here. Very rare with any of us catch the tops and the bottoms, but on that particular one, did catch the bottom, did catch the top. BVN, I haven't added to that, but nibbling would be the description. Groy, I'm interested, but technically none of these are buys now. I mean, we broke the 78.6 fib, everything's rolled down. But when it comes on to things like this is more for me to do with fundamentals. 2 months ago, this was 72% higher than it is today. So for me at the moment, still the mining stocks are hedging the other stuff. I explained the other week I'd sold the big stuff. I'd sold Amazon. Yes, I think it's going to rebound, but I explained why. That potentially a rebound on this could be 18, 20%. I've just shown you some of the mining stocks could be 70%. Quantum's got hit hardest because that's something more for the future. And I have bought some more uranium in recent days as well. And that takes me to 12 o'clock. So, yeah, you see, Ashley. I just let me see if there's any questions before we finish. Apart from F&P, obviously, what are the best platforms I should subscribe to? I have now finished my studies and looking to take this a lot more seriously. What do you mean about a platform, Brendan? If you like, book me for a chat and I can explain to me clearly before we have a chat, and I will give you a bit more personalised feedback. Clive says, thanks, Mark and Ashley. Grant, I can't believe you've gone back. I thought you'd be staying well away from there for a while. Devon says, Egypt, we're in the meeting. Devon says, Egypt, we're in the meeting with Turkey and Pakistan. Yeah. So the other thing, and remember, I am reading Al Jazeera, I'm reading the Israeli Times, as well as WSJ, CNN, some of the UK press, not the BBC because it's a joke, trying to get, you've got to be really careful. You don't just read your own country's news because it's heavily, heavily redacted. High risk, high reward. No, Grant, going back to Qatar is not high risk, high reward. I would come up with another word for it. Anyway, righty-ho, thank you all for attending. Well done to Ashley for holding the fort. Ashley will be posting his analysis later today. Mine will be there in the morning. And keep checking in with the forum and stay safe, especially if you're in the Middle East at the moment. Everybody stay safe. Catch you all later. Thank you very much for attending.